The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9 a.m. Eastern Time, Wednesday morning, 30 minutes to go until the opening bell. And we got some bank earnings kicking things off. And, man, talk about beating in a big way. But the bank's not quite as high as you might think on some of the numbers that they're putting up this morning so far. Goldman Sachs, JP Morgan. We'll jump over to all of them in a moment to kick things off on the indices. S&P's right now flat, 41.32. We made it to 41.39.75 last night at about 3 o'clock Eastern Time. Backed off a bit into the close, and we've just been chopping around between about 41.30 and 41.40 in the S&P since about 3 p.m. Eastern Time yesterday. Tech stocks, how about 14,000 in the NASDAQ 100 on the dot right now. We're up 24 points. That's 0.2% in the positive at 14,000 in the NASDAQ 100. We get the Dow negative by 16 points at 33,554 in the Russell, positive by 3, 22.27. Bitcoin, quite a day in the crypto sector. We got Coinbase going public today. We'll talk about that a little bit. Their symbol is going to be COIN, C-O-I-N. You got Bitcoin. How about that? 65,520 we hit. We're currently up $1,200 on the session. Technically, about 2%. Man, Bitcoin accelerating into Coinbase going public today with a direct public offering. Little different from an initial public offering. We got crude. Look at that acceleration. Crude up $1.33. We're blasting higher as we speak. 9 o'clock, not just sure what just came out at 9 o'clock, but crude just popped 50 cents to 61.51. We got gold right now down $3 at 17.44. Gold, quite the acceleration yesterday. We traded from about 17.25 up to 17.50. Silver's up 4 pennies at 25.47. And we'll jump to notes and bonds right now. Quite the acceleration yesterday we got in terms of higher price and lower yield. Right now we're down about 3 ticks on the session in the 10-year, 131.31. We're looking at a yield right now of 1.63%. On the 10-year. The 30-year is flat at 157.05. We'll jump over to the VIX. As this market continues higher, we might be looking at a 15 handle. We got down to about 16.30. We're trading at 16.53 in that VIX right now. Not sure that's a real print of 15.38 on the VIX, but nonetheless, lower VIX prices as the market continues higher. Okay, let's jump right into the bank earnings because, man, these numbers pretty astounding. Also pretty astounding in terms of how much was priced into these equities. Goldman Sachs will kick it off. How about record results that top the street amid booming investment banking? Check out the numbers, folks. You almost can't overstate it. Where does these expected come from? All the news this morning was that, the whisper's higher, and then the whisper behind the whisper is even higher than that. So that's why they're not moving. But nonetheless, you're talking about earnings of $18.60 a share for Goldman. They were looking for $10.22. You're talking about revenue beating by almost 50%. $17.7 billion versus $12.6 billion. Now, we'll get into it a little bit more. Check out the chart first. Goldman, we're up like 1% on those types of numbers at 330.70. We're basically just trading where we were 24 hours ago in Goldman. You take a look at the daily. There's your reason why, folks. We were just trading at a price point of 185 in November. We were even trading at a price point when you back it up to their last earnings of about 300. So you're still up about 10% since their last quarterly earnings, but strong numbers. And we get into it in terms of where they are. Let's jump right to JP Morgan. Big numbers there as well. We'll jump over to their chart first. JP Morgan, basically down about $1.50 this morning, I think. Yeah, there's their acceleration. So they got the conference call beginning at 8:30. JP Morgan's down about $1.50 right now. Strong numbers. They're having a little bit of a problem with lending. But, man, the trading profits in some of these investment banks. JP Morgan beats profit estimates, strong trading. They also released $5.2 billion that they had put in loan loss reserves, preparing for the worst. Doesn't seem like the worst is going to happen. So they get to add $5 billion. They take them out of the loan loss reserves. First quarter profit, $4.50 a share. That's $1.28 a share just from the release of those loan loss reserves. Market was only looking for $310. Revenue, $33.12 billion. Market was looking for $30.52. Trading operations, which produced about $1.8 billion more revenue than analysts expected. So that's a big chunk of that beat was the trading revenue. You get into the numbers. $14.3 billion was their profit. Company-wide revenue, $33.12. They released the reserves. I wanted to get into the trading revenue they had in here. So investment banking revenue surged 222%, or a full $2 billion to $2.9 billion. Market was looking for 2.65. And you know what? I'm going to jump around because I think I got. Yeah, let's check out this article from Bloomberg. I want to talk because this digs a little bit more into loans declining. That's the part I want to talk about in this, and it doesn't necessarily speak to the banks. They're doing just phenomenally. They released the reserve. They talk about this. So investment banking fees. This is J.P. Morgan. We're continuing jumping articles here. Investment banking fees to J.P. Morgan soared 57%. Net income $14.3 billion, as we talked about. Investment banking fees jumped to $2.99 billion. Equity underwriting more than tripled to over $1 billion. And here we go. The bank's traders generated $9.05 billion in revenue in 90 days. Remarkable, folks. That's more than $100 million a day in trading revenue in the first quarter, up 25% from a year earlier, exceeded expectations. 47% increase in equities, 15% jump in fixed income. And they got full year 2021 adjusted expense outlook to $70 billion from $69. But nonetheless, they did talk about that there are loans declining. Not necessarily what you want to hear. I mean, these investment banks, they're making a crush with the type of volatility we're getting across the board, whether it's in equities, whether it's in fixed income. But loans, not exactly what you want to see declining when you talk about the economy ramping back up as we get into that. Okay, what else we got going on? We got to talk about Coinbase. We got articles everywhere here. So the headlines, of course, unlike any market debut Wall Street's ever seen. We'll jump over to what Bloomberg's got going. Throw a spotlight on NASDAQ amid Bitcoin boom. We pulled it up. You can't keep up with how Bitcoin is accelerating in terms of they have the high at 63,000. We just pulled it up. It already hit 65,000. Coinbase, they're going to go public with a direct public offering. $250 a share is the reference price for Coinbase direct listing, a number that's a requirement for the stock to begin trading, but not a direct indicator of the company's potential market capitalization. Investors will have a better sense of the valuation once shares start trading. That's putting it lightly. Investors will have a much better sense of the valuation when actual trades go through versus just a reference price that has no bearing on anything. Coinbase shares changed hands at roughly $90 billion valuation in early March. Bloomberg had reported that valuation, based on $350 a share that the stock was trading at on the NASDAQ private market auction, would make it the biggest company to take a direct listing route to the market. At $250, it would put it at $47 billion. Just my analysis, folks, that thing is not going to sit at $250 a share when you had it trading in March at $350 a share in the private market before you go public. We'll see where it goes. We're all going to find out today. The one thing that's interesting, we'll talk about it a little bit later in the show as we talk about some cryptos. There's a lot of risk in this sector still. Now, anytime you have the legitimization of the biggest exchange out there, getting a market cap, getting listed publicly, market cap about $100 billion. But man, regulation, it's out there. It's a looming risk to the entire crypto sector. Bitcoin, though, showing no fear at all as we're sitting right near 65,000. You put that thing on a daily. My goodness, talk about 6,400 to 64,000 in 1 year. Stay tuned, folks. We're coming right back after the break. We'll be talking to Kevin Hinks from the TD Ameritrade Network.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps negative by 2 points right now. We got 12 minutes to go until the opening bell. NASDAQ 100 tech stocks continue to show strength. We have the NASDAQ 100 up 13 points, just a hair under 14,000. We had 14,029 earlier this morning. Let's jump over to our man, Kevin Hinks. Folks, 11 a.m. Eastern time every trading day, live on Tiger TV right here at TFNN. Kevin Hinks, Alex Coffey, and the team at the TD Ameritrade Network. They break down the markets. They break down hypothetical trades, option trades. They walk you through the entire thing. And, folks, it's a great time to start watching that program if you don't already, because we're kicking things off in earnings season. We got banks out this morning. Kevin Hinks, good morning.
Good morning, Tommy O'Brien. You know, a big morning so far, but, you know, it's interesting. You've got J.P. Morgan lower, slightly lower. You've got Goldman slightly higher, and you've got Wells Fargo basically unchanged this morning. So no clear direction on the banks out of these, but the one thing you can see is some gaudy numbers out of the banking sector.
It is remarkable, Kevin, like you put it, and you let it off. And I talked about it a little bit on the start of the program myself, saying Goldman's trading right now at 331 pre-market. We traded at about 327 to the close yesterday. So you're up approximately 1%, just a hair over 1%. We're as high as 334. And Goldman took in $17.7 billion in 90 days versus an expectation of $12.6 billion. They crushed it on earnings as well. I wonder, Kevin, you know, my own personal bias, now banks are their own animal right now in this economy with the way rates have risen, of course, over the last 3 months or what it is. But does this really set the stage maybe for some lofty expectations across the board? Because, man, we knew they were high for the banks. They were, but the banks, man, you can't crush it out of the park more than they almost did. And we're talking about a pretty muted reaction so far this morning to kick off the earnings season as we come in the next month or so.
Well, some of the banks' earnings, in full disclosure, are a little bloated by these loan loss reserves. Like J.P. Morgan, let's say, they beat in revenue $33 billion versus $30.5 billion. That was expectations. But $5.2 billion, or $1.28 a share, came from loan loss reserves going back on the balance sheet. So some of these numbers aren't as gaudy as they look on paper because you just don't get a lot of credit for those loan loss reserves coming back on the balance sheet. So Goldman had them. So you're just seeing, from from a trading perspective, Goldman outperformed. For an overall banking perspective, J.P. Morgan did incredibly well, balanced across the board. And Wells Fargo is really just trying to get back in the game here, as they're trying to get their asset growth limit removed by the Fed. So they're working that way. So it's been an interesting morning, a lot to go through. But I was just on with Oliver Rinnick, and it's hard to. And it's frustrating sometimes. You see these numbers in banks, and then you don't get the reaction. And you can't really tie that. You can't connect those dots to the rest of the market. Each sector is going to trade its own way. And let's face it, these banks have run a long way into these earnings. So there's a lot to make up for in terms of stock movement. So a lot to go through here as we begin earnings season, Tommy.
It is pretty cool, man, what we're seeing over the last, 13 months, the not necessarily the rotation, but just how the market continually gets ahead of itself, right, as kind of that rotation or the shift of COVID. First, it was the work from home stocks, and then we had the transition in November when, we got the efficacy of the vaccines, and then you had the airlines. You had all that happen, and of course, rising yields. You have the banks accelerating over the last 3 months. Loans at J.P. Morgan, there's just so much going on in these numbers, like you talk about, Kevin, in terms of the loan loss, $5.2 billion. The loans actually falling 4% from a year earlier for J.P. Morgan, driven by a 14% drop in credit loans. Be interesting to see how kind of that shakes out. Of course, that probably weighing on it a little bit as well, as you talk about, it's not all in those headline numbers that we get across the board. So we got banks this morning. We got a couple more earnings coming up this week. We really kick into things, as we get the next few weeks ahead. What are you guys going to be talking about on the program Fast Market coming up at 11, Kevin?
We're going to talk another day of talking about some of the big financials, Bank of America and Citigroup. And in between that, like Folio is going to do a presentation on PepsiCo, a stock I'm a little bit familiar with. So we'll show the relationship between soda and actual salty snacks, which may be the biggest part of PepsiCo.
All right, man. Soda, salty snacks. Why not? They go well together for sure. Kevin, we appreciate the update as always, man. We look forward to the program Fast Market at 11. You have yourself a great day, man.
Thanks for having me on, Tommy.
You too, Kevin. Thanks, man. Folks, every trading day, 11 a.m. Eastern time, as we come into earnings season, I'm telling you, the way they walk you through trades, when I was first learning to trade options myself, whether it's on the Thinkorswim platform, and folks, they are a sponsor, but their platform that they put together, Thinkorswim, for a trader out there, there is just so much information out there. They really walk you through how to use it, how to make the most of it, and how to apply that to when you're trading your own personal biases across the board. Will be interesting. We got some banks coming up. We got Pepsi. I think we got Delta as well this week. And then things really kick off with some of the bigger stocks as well, starting things next week in a big way. All right, jumping back to Coinbase. So regulation, right? Just want to continue this discussion a little bit. Now, this is going to be something to see, folks. It's going to be COIN. It's going to be Coinbase. Not sure what time that's going to go off at. The reference price means literally nothing. Okay, this is a different deal from when you go IPO and you actually have an issuance. You do not have an issuance. You're just going direct to the public. It's a reference price, but that reference price doesn't have a direct bearing on what it's actually going to trade at. It's probably going to trade dramatically higher than that, at least at the onset of public trading. But even the CEO here, he states something that should be pretty obvious and pretty substantial. Regulation is one of the biggest threats to crypto. And I found it pretty amusing the way he categorized this. And, there's nothing wrong with the way he's saying this. He's being out forthright. But in terms of just asking, he says, basically, we just ask that, hey, we want to be treated on those level playing field with traditional financial services at the very least and not have any kind of punishment for being in the crypto space. Their valuation might not be punished for being in the crypto space. It might actually be helped by being in the crypto space, to be fair. Cryptos, though, are not going to be treated on a level playing field with U.S. dollars where supply is constrained by the Fed and where everything is trackable to the penny. They're not going to be treated in that way because they're not treated in that way right now. So they're asking to be treated like everybody else. Meanwhile, they have the upper hand that they are not tracked, right? That they don't fall under the regulation, that the money supply can't be manipulated by the Fed to contribute to the stimulus type of deal we've had right now. So that's quite a lofty ask, is all I'm going to put out there. A very lofty ask when he says we just want to be treated like other traditional financial services without any kind of punishment being crypto, and they will be treated like that. But crypto is the important part, is facing possible, just possible, folks, regulation of some kind. It's not going away. You know, I'm not this boogeyman that says the government's going to cramp down. It's never going to exist. But, man, there's a potential for some regulation that could really hamper some of the lofty expectations for what's happening in that crypto market right now. So just be careful and be aware of it, because there's nothing to say. You know, number one, we know that our federal government, along with many, want to be able to track the flow of money, which is made a little bit more difficult through crypto. There's no reason, nothing to say that won't be hampered at some point. And if it would, that would hit the market. And, you know, the whole money supply deal. They don't want to have their control over the U.S. dollar taken out of their hands if Bitcoin becomes the new, or maybe it's the Chinese digital, right? Stay tuned, folks. We'll be right back from the market open.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets open. We got the S&P is negative by 1 point right now. We got the tech stocks pulling back a bit into the open, but we're flat technically in the session. We were as high as 14,029 overnight. We get back about 50 points right now in the open, 13,972. We got the Dow positive by 4, 33,575. We'll jump to Bitcoin, 64,515. Oil's up $1.25 right now. Look at that acceleration we had right at 9 o'clock, up to 61.57. And gold right now, negative by $9. Gold, quite a little drop as well. The gold contract trading at 17.38. All right, what else we got going on? Credit Suisse, they are still unloading shares of Discovery from Archegos. 60 Minutes, they called it Archegos. I don't know. How do you pronounce that? Discovery. A little bit of a pop at the open, but look at that acceleration. What is going on selling shares? Let's see where we are. How far are we after this saga began? I mean, it probably began here, right? No, that was when they pushed out shares. I guess it probably began on the 24th. The fire sale really began. Folks, it's April 14th. I mean, even if you say the Max Payne Day on March 26th, again, it's April 14th. What is Credit Suisse still doing, selling billions of shares of these companies that they supposedly are on the hook for? Remarkable demonstration of mismanagement, in my opinion. It just keeps going. I'm very, very surprised that that they have more shares to sell. You got Discovery down about 3.8% today. I know they were one of them. Looks like Viacom probably wasn't. There were block shares. Let's see if they talk about what they were in here. Discovery, shopping blocks of different classes of shares is what they were doing. 19 million shares of Discovery A, I think it is, and 22 million of a different class. Nonetheless, just remarkable. Not sure what Credit Suisse is doing. If you have any Credit Suisse, I would get out of it. It's just when you can't make sense of something like that, folks, I don't know what is going on in the executive suite over there that somehow they still had shares of these companies on their balance sheet and they just didn't, cut their losses and start fresh. I don't know if they were still trying to manage this and hoping for a bounce. That's not what the business they should be in. They don't lend traders like Bill Hwang money to hold those positions when they already have billions of dollars of losses they're going to have to cover, hoping it goes back up. Crazy. All right. Oh, and with that, Bernie Madoff, he is dead at 82. That story pops up. Of course, one of the biggest Ponzi schemes out there. Okay, Bed Bath & Beyond shares fall on mixed results. Backs forecast as turnaround continues. Well, turnaround, their shares not so much this morning. BBBY is their symbol. Yeah, we're down 15% right now on their numbers. There's your acceleration to lower prices. Bed Bath & Beyond, double-digit decline in sales, ongoing store closures, and in divestments. Weigh in results. Let's see. Retailer reaffirmed its outlook for fiscal 2021, about $8 billion. It's in the process of remodeling stores. Yeah, they need quite a remodel, all right. I mean, decent numbers at the top, but I'm sure it has to do with those declining sales. They're in a big problem. Maybe the market having some lofty expectations of what they could do, pull themselves out of the doldrums. Not so much. I mean, we're back to where we were trading at in October of Bed Bath & Beyond. Talk about getting a little lofty with the Reddit acceleration to 53.90. But right now, I mean, you're below anywhere you were trading at since basically January 14th in this equity, Bed Bath & Beyond. Okay, what else we got going on? Let's see. GameStop. We'll stay with the Reddit deal. This is an interesting one. So GameStop retiring some debt. They redeemed $216 million of senior notes, according to a statement yesterday. And they also retired $73.2 million in debt last month. They're on the quest to be debt-free. And, folks, why not be debt-free when you're able to push shares out to the public at $150 to $200 when you were just trading at $20? Of course, that makes sense. Something to consider on this company, right? Ryan Cohen's the chairman. He was the founder of Chewy. He's the one who started this all kind of. He's going to try and turn it into an online marketplace player versus being brick and mortar. With interest rates currently where they are right now, if they thought this company was undervalued, they would not be pushing out shares, retiring every single dollar of debt that they have on their books. They are instead choosing to retire debt, which was probably at a high interest rate because of their precarious position that they find themselves in terms of possibly going bankrupt at $3 back in July. It just speaks to, they wouldn't be retiring all the debt if they thought they were super undervalued. They obviously say, hey, why would we ever take out debt when we can push out shares at $153 when that's probably empirically worth more than our company deserves. So credit to them for doing it. They're going to be debt-free. Debt-free is the way to be. They might have a future, and sometimes it's a self-fulfilling prophecy in terms of people buy the stock, they boost it up. We're talking about a market cap right now approaching $11 billion. I was going to say $10 billion, right in that area. And they get to use that market capitalization to retire all their debt. They boost their balance sheet, and with that, they can do more in the future. We got GameStop up 8.2% today. Looks like nothing on this chart, but man, we move pretty quickly. We're up 8.2% for GameStop. Let's check out some of the FANG stocks. Quite the accelerations we had yesterday. You got Amazon. We're down 0.3%, but man, that was a quick acceleration from 3,000 to 3,400. You see the acceleration. Let's activate this drawing. Let's extend it out to the right since we've basically now eclipsed that level. And again, it's an art, not a science, folks. Maybe this one could be a little bit higher, right? Maybe it could be here. I'm taking kind of a linear regression approach. We put it here. We're up at the top end of that escalation in a big way. Excuse me. And seems to be next stop is 35.52. Now, it's interesting from the conversation I had with Kevin Hinks. There's a bunch, banks are their own animal, as I started off that conversation talking about. There's lofty expectations everywhere, but banks have accelerated, the likes of Goldman Sachs, for instance. We're talking about Goldman goes in November from almost 180 to 330. JP Morgan goes in November at almost 90. We're trading at 150. Amazon goes in November at 3,200. We've been chopping around since July. So quite a different animal when you look at some of these equities, where we're going to go. Amazon, quite the acceleration, maybe pausing a bit today. We got the NASDAQ 100 down 25 points right now. Jump to Microsoft shares. Microsoft making new all-time highs yesterday, backing off a bit to 259.19. We're at 257.27. Google, my goodness, Google, 22.73. Google back in November was trading at 1,500. So Google's up 50%. They might have some lofty expectations when they come out with their earnings, their numbers. Jumping over to the Analyze tab, the Earnings tab. We're talking about basically 2 weeks from yesterday for Amazon, Google shares. Excuse me. Let's jump around. We got Amazon a couple days after that on the 29th. We said Microsoft's the 27th. Amazon's the 29th. Google, lots of action there. Let's see. Facebook. That's going to be a big week. April 27th to 29th. We're talking about 2 weeks from yesterday. We get some big tech stocks in a couple weeks delivering their numbers in a big way. Let's take a look at some of the stocks that I always love to take a look at. Disney shares. We got an ABC. This thing accelerating past the B point of 183.40. We've been chopping around a bit. That area has turned into support for Disney. Be nice to see it get back in this uptrend channel. 226, the next leg up for Disney from that A to B, C to D. Disney. I mean, it'd be interesting to see, folks. We saw it. We've seen it in Uber this week. We'll jump to Uber. Uber puts out numbers to start the week that they had the biggest month ever. Biggest month since, I think, February, March of last year for their ride-hailing business. Uber pops from about $57 up to $60. We're down 1% today. But you're going to see similar things happen with Disney. You're going to see it happen when you see movie theaters, packed houses. You're going to see it when you see Disney, amusement parks, packed houses. And we're not quite there yet. It's in the market. Not quite pricing it in just yet. Stay tuned, folks. We're going to be coming back talking Forex with our man Teddy Kegstad. Stay tuned.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the markets inching into the positive. S&P's positive by 3, NASDAQ positive by 9 right now. The Dow positive by 105, getting a little bit of a lift. Let's jump over to our man, Teddy Kegstad. Folks, you can reach Teddy every trading day at forex-trading-unlock.com. We talk to Teddy every Wednesday at 40 past the hour, talking some Forex. Teddy Kegstad, good morning.
Good morning. We got some interesting things shaping up today.
Yeah, we got a lot. We got some action in a couple of them yesterday. I know, where do you want to kick things off? I was jumping around the euro. I know we got some action in the yen the last week. Where are we going to start, man?
Well, let's say talk about the tug of war that's setting up the dollar move right now. So
okay.
Now we know that the dollar has been correcting to the downside as far as the dollar index for the past few weeks. Now, everyone's getting very, very bearish the dollar, but see, here's the reason why it's been going on. Over the past few weeks, we've seen the interest rates stabilize to some degree. Have they bottomed? I wouldn't say that, but right now, short-term intraday, they're making higher move highs and higher move lows, and they're flirting with a little bit of an upside breakout. That's negative the dollar, which is giving added pressure to dollar bears, helping them out, okay? Then we have the gold market, which I know you guys watch out, and right now, it's making higher move highs and higher move lows in a very short-term sense, and it's flirting right now with some resistance and a possible breakout to the upside. This is also giving pressure to the dollar, okay? And then interestingly enough, we have the oil numbers that are coming out later, and I was looking at the markets getting ready to talk to you, a half an hour ago, and since then the oil market actually got a little pop. So I thought it was pretty neutral today, and I kind of have that still in a neutral phase, but now it looks like in front of these numbers, it's looking to break out. And if we have that to break out to the upside, that's going to start to cause some swinging in the different markets. So let's talk about where they are right now because of these variables. With oil stable and with these other markets doing what they're doing, we have this is what's going on. We have the Australian dollar that is a short-term bull, okay, on an intraday daily basis. Not bullish overall because it isn't a corrective down move right now. But right now it's looking to keep on pressuring resistance, especially as these interest rate markets continue to rally and gold continues to rally, and especially if oil gets a rally, okay? New Zealand dollar had a big pop to the upside today. It really broke out. So it's a commodity-driven thing that's going on right now once again, and it's starting to rear its little head out of the corner again. Because remember, the last couple of weeks we said it's kind of starting to slow down. Now it's starting to come back again, okay? Then we have the U.S. dollar, Japanese yen, which has been retracing versus the bullish rally that's been going on for the past couple months. In fact, if you look at a yen chart, just like a Swiss chart, they both look very similar, okay? And that's, once again, because of oil being neutral, gold starting to rally, and also with interest rates that have been going down, okay, once again, because the market prices have been going up. So that's been driving those trends, okay? The euro US dollar, it's making higher move highs and higher move lows in the short run, and because of these other factors, it's still going to pressure resistance. I'm not looking for any major moves, especially because if we do see oil break out to the upside today off of these numbers, especially in a big way over the next couple days, that's going to change everything, because then we're going to go back to where the yen, the U.S. dollar yen, is going to turn around, okay? That's where the U.S. dollar Swiss will turn around. That's also where the British pound U.S. dollar, which has been making newer move lows and lower move lows and lower move highs, it's going to turn around once again, you know? So we have a lot of, like, we've been going kind of neutral, and it's been a very choppy trade, you know? So right now we have to wait for a signal, and I think the short-term trends are being reinforced by these other markets, and we really got to see if they're going to really start to press a move or not, or reverse gears to give us a new outlook for the dollar.
It's pretty cool how, whether it's country to country or commodity to commodity, that it drives so much. I mean, I try to, you talk to people outside of the stock market, smart people, just not inundated day in and day out like we are. And you talk about the interrelationships of some of these, and it makes so much sense, but at first glance, you don't really understand. But when you look at the world economy and how they all drive each other in 2021 especially, it is cool how those commodities and the countries that rely on them, of course, it's going to be a factor, especially something like currencies where it's all about supply and demand. When you're talking about a currency, there's no Reddit boys and girls that are going to manipulate in terms of the raw power of some of those Forex markets.
They're too big. Right. It's not like a stock, So, and we got to remember too is that when we talk about interest rates, which is definitely a function of currency values, no matter whether it's a dollar or what have you, the interest rate market's been trending lower on the long end of the curve for months now, and it's had a very extreme slide. So for it to be stabilizing right now and coming off of its lows, it's a normal thing. So I don't want people to be overzealous being bearish the dollar right now, because especially as these commodities, if they start to resume their trend, like remember, I have $100 oil still in my sights,
Okay.
If we have a breakout to the upside, it's going to crush the yen. You're going to see the U.S. dollar yen trading at 114, 115, 118 in the next couple of months. If oil shoots up to $85 a barrel, let's say, not even 100, just to 85, the U.S. dollar yen most likely will be trading at 118, 117 at least, if not even pushing up to 119, okay? U.S. dollar Canada, that bear will come back and you'll see it slamming new lows, And right now, it's just fishing along. It's just going sideways. Like, it's a range trader's dream and a swing trader's nightmare right now, So, but if these come in, once again, with oil, if oil goes to 85, you're going to see the British pound U.S. dollar snap back to the upside in a major, major breakout. And you and I both know that when the British pound actually starts to kick up its heels, those ranges on those days are devastating to someone on the wrong side if you don't have your risk managed, properly.
Sure. Well, Teddy, man, we always appreciate the update. I wish we had more time. I think we're going to have to get you to do a webinar or something, man, because these 9 minutes, they fly. And it's just a great education, man. We can definitely figure that out. We got to. Teddy, we appreciate it, man. You have yourself a great week, and we'll talk to you next Wednesday.
Sounds good. You guys take care.
Thanks so much, Teddy. Take care, man. Folks, every trading day, you can reach Teddy, forex-trading-unlock.com. We talk to him 40 past the hour every Wednesday. Tune in for it. Quite an education. These Forex markets, the world economy, you really learn a lot in terms of the driving forces that we've had in some of these markets. Checking back to where we are in the markets. As I mentioned, a little bit of a lift. We get the S&Ps up 5 points right now, and there's your acceleration. We come into 930 at 4130. We open. We're up about 8 points, bumping right into we were where we were pre-market at about 41.39 right now in the S&P market. We'll jump around to some of the FANG stocks, as we mentioned. Amazon still slightly lower. Let's jump around to some of the airline stocks because they pulled back yesterday on the Johnson & Johnson news that they had been paused that vaccine for some time. American's up 1%. Delta's up 2% right now. Carnival's up 1.3%. So a little bit of a rebound from the acceleration we saw yesterday in some of these stocks pulling a little bit lower. The VIX right now, 1672. And let's check out Bitcoin. How are we doing ahead of the Coinbase? Bitcoin, 64,000, and Coin not yet going. I think they'll start trading a little bit later this afternoon. All right, folks, stay tuned. We got one more segment in the program. Still time to give us a call, 877-927-6648. Stay tuned, folks. We'll be right back after this break.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
There we go. I got it. Shame on me. Sorry about that. All right. S&P's positive by 5. NASDAQ minus by 18. I wanted to wrap up the program, folks. Now that we got some sound to do it with. Lots of talks of the laws being passed of voting. I'm in Florida. This is not political. It's about my vote. And Florida, under Ron DeSantis, they're trying to pass a law that would basically mean that you can only compare signatures to one signature on record. Tampa Bay Times has a great article out here talking about Ron DeSantis' own signatures over the years, which would horribly mismatch, basically, and get his own ballots disqualified in the state at a time when I voted by mail last time. They're also going to restrict how often you have to ask for those ballots to come, which I don't agree with. I think it was originally you could sign up and say that you want to vote by mail for the next couple years. Now you have to do it every single year. Nonetheless, the signature deal, as opposed to right now, they basically can match every signature they have on record. The law would make it to where there is one signature on record, and it's probably the last time you signed for your license or something like that. And folks, the times that you do that, they're on some weird electronic little podium that you signed your signature for, okay? And then they're going to try and say that the only one they can compare it to is that one, as opposed to you have a list of maybe 10 or 12 that you have over the years, whether you've signed licenses, whether you've signed any type of official registration, things like that. That's how it works right now. I personally, myself, I know using those electronic boards where you sign on something, it's not a very accurate signature. And so what's going to happen is that's an effort right there to disqualify mail-in ballots, folks. That's what it is. You shouldn't be ashamed to say it. I live in Florida. It's not political. And the governor is trying to make it more difficult for my ballot to count if I mail it in, because I have to actually study my own signature and record it. It's very unfortunate, and you got to call it what it is. But that doesn't. All right, folks. Markets creeping higher as we speak. Look at the S&Ps up 7 points right now. We got the NASDAQ minus 13. We got Wednesday in the markets. We got our man Basil Chapman coming up next. And don't forget about Basil's webinar.